If you're in Northwest Austin, Steiner Ranch, Treviso, Grand Mesa, Leander, Georgetown, Liberty Hill, or Round Rock, and you're wondering, should I move in 2026 or wait? This video is for you. I'm going to walk you through what housing history really says about crashes, where mortgage rates are trending now, and what the data is telling us about 2026. All in plain English, no hype, just the numbers, and what they mean for you. I'm Jeff Joseph. I'm a realtor in the Austin area with ERA Expert. I served as a police officer. My job was to protect people in this city. Today, my job is to protect your equity and help you make a confident next move. This video is for homeowners who may sell in the next 12-24 months, move-up buyers who will both sell and buy, and anyone relocating into the Austin Metro who wants clarity on timing. Let's start with the big picture. When you look at housing in the headlines, it sounds like every few years we're in a crisis. But the slides I'm using for this video tell a calmer story. Over the last 50 years, we've had 6 major dips in home prices. A recession in the early 1980s, a mild recession in the early 1990s, the dot-com bust and 9/11, the 2008 global financial crisis, the COVID shock in 2020, and the recent inflation period in 2023 and 2024. Each of those moments felt huge in the moment. Prices dipped, people got nervous, the media went crazy. But when you zoom out to the full 50-year price chart, you see something important. Yes, there are dips, but the long-term trend line is always up. Every drought in housing has ended in recovery, and then prices move on to a higher level than before. In Austin, and especially in our Northwest corridor, Steiner Ranch, Treviso, Grand Mesa, Leander, Georgetown, Liberty Hill, Round Rock, we add in strong job growth, quality of life, and steady in-migration. That long-term uptrend becomes even more powerful. Here's the key takeaway. Don't judge the market by 1 year of fear. Think in years, not weeks. The history of housing over decades favors the patient owner, not the person who panics at every headline. Now let's talk about mortgage interest rates, because that's what buyers feel every single month. On the rate slides I'm using, you see 3 clear phases. First, the COVID era. Rates dropped into the mid-2s and 3% range. Those were historic lows. Second, the spike. Rates shot up into the 7 to 8% range. That created a dual drought for the mortgage industry. Purchases slowed, refinances almost disappeared. Third, where we are heading now, the newest charts show mortgage rates trending down, not back to 2%, but easing off the peak and moving into the low 6s, with forecasts pulling toward the high 5s and low 6s over time. Now here's why that matters. On another slide, you see buyer demand broken into 4 bands. Above 7% rates, buyer demand is weak. Between 7 and 6.5, demand is limited. Between 6.5 and 6, demand is good. Below 6, demand is strong. As rates inch down from the 7s, each small drop wakes up more buyers who were waiting. The mortgage purchase index on these slides confirms it. Buyer demand is now at its highest level since early 2023. Why? Because people waited. They put off moves in 2023 and 2024. They didn't want to trade a 3% loan for 7%. So demand didn't disappear, it just stacked up on the sidelines. Now that rates are trending down, we're starting to release that pent-up demand. You'll hear people say, I'm going to wait until rates go back to 2 or 3%. Here's the truth. Those COVID-era rates were an emergency response to a global disaster. To see that again, we'd likely need the same kind of disaster. Nobody should be wishing for that. Instead of chasing a fantasy rate, smart buyers and sellers focus on what's historically normal, where the trend line is going, and how to structure a move in today's rates, with the option to refinance later if they go lower. For Austin's Northwest corridor, that means as rates trend down, more well-qualified buyers will step into the market, and they'll be competing for a limited number of the best homes, especially in places like Steiner Ranch, Treviso, and Grand Mesa. So what does all of this mean for 2026? The slides I'm using for this section point to 3 big points. First, smart money is betting on housing. Warren Buffett's company, Berkshire Hathaway, has invested roughly $1.375 billion into home builders like Leander and D.R. Horton. Buffett is not a short-term trader. He buys assets he believes will be more valuable over time. When someone with that track record is buying into housing, it's a strong signal of long-term confidence in real estate. Second, elections and home sales. One of the slides shows U.S. existing home sales before and after presidential election years. After 9 of the last 11 presidential elections, home sales went up the following year. Why? In election years, people hit pause. They feel uncertain. They wait to see what happens. The year after the election, that uncertainty clears. People act on plans they've been sitting on. Moves that were delayed finally happen. So, historically, the year after an election is a busier housing year. Third, the actual forecasts for 2026. On the sales forecast slide, you see 2024, around 4.78 million total home sales, 2025, just under 5 million, and 2026 forecast at over 5.4 million. That's a clear expectation of more transactions. On another slide, you see Fannie Mae's home price index expectations from 2025 to 2029. Even the most conservative forecast shows prices higher over that period. The more optimistic scenarios show cumulative increases in the mid-teens, all the way up into the mid-20s in percentage terms. Then you add inventory. In the South and the West, where Austin sits, inventory has largely recovered compared to pre-pandemic levels. That doesn't mean oversupply. It means we finally have enough homes to sell when buyers show up. So, put it all together. Rates are trending down. Buyer demand is waking up. 2026 sales are forecast to rise. Smart money is investing in housing. And historically, post-election years bring more activity. As more buyers come off the sidelines and rates ease, that demand will chew through available inventory. In desirable Austin submarkets, Steiner Ranch, Treviso, Grand Mesa, and well-located homes in Leander, Georgetown, Liberty Hill, and Round Rock, that almost always leads to upward pressure on prices. Not a return to 2021 frenzy, but a firmer, more competitive market for well-positioned homes. So what should you do with this information? Let's break it down. If you own a home in NW Austin or the suburbs, and you're thinking about selling in 2026, now is the time to plan, not to panic. You don't need to list tomorrow, but you do want to be ready before the wave of activity hits. That means understanding your current equity, knowing how your specific neighborhood is performing, and having a pricing and prep strategy that puts you ahead of the crowd, not chasing it. If you're a move-up buyer, you'll likely sell into a market with stronger demand and buy into a rate environment that's better than the peak, with room to refinance later if rates soften. Your real question isn't, will rates hit the bottom? Your real question is, how do I time my sale and purchase so my family lands in the right home, at the right payment, in the right school zone and community? If you're relocating into the Austin area, trying to time the exact bottom almost never works. Focus on getting into the right community with the right long-term potential while rates are trending in your favor, instead of waiting for a number that may never come back. Let me quickly recap. Over the last 50 years of housing history, we've had dips, we've had droughts, we've had real crises, but the long-term trend line is always up. Mortgage rates spiked, now they're trending down, and every step down releases more pent-up buyer demand. Forecasts for 2026 call for more home sales, post-election activity, and continued upward pressure on prices, especially in markets like Austin's Northwest corridor. If you own a home in Steiner Ranch, Treviso, Grand Mesa, Leander, Georgetown, Liberty Hill, or Round Rock, you don't have to guess your way through this. We can sit down and build a custom 2026 plan for your situation. If you want that kind of clarity, reach out. You can call or text me directly at 512.91, 7443, or visit jeffxhomes.com, and we'll schedule a time to walk through your options. I'm Jeff Joseph, Realtor with ERA Experts in Austin. Thanks for watching.